Hi everyone, I'm Michael Ruger. I'm the managing partner at Greenbush Financial Group. We've been getting a lot of calls, obviously, over the last few weeks from our small business owner clients. Obviously, a lot of hardship out there with what's happening surrounding the coronavirus containment efforts. Some of our small business owners have either been shut down or they're working at a less than 100% capacity, and they're looking for capital now to say, hey, I just have to bridge the gap between now and when I can get the company back up and running again. And Congress has approved a number of loan programs that have recently been funded, and one of those loan programs is the SBA disaster loan program. So we're going to be going over that program today, the amount of loans, what the interest rates are, the durations of the loans, as far as collateral, do you have to put up personal collateral for these types of loans, and more importantly, what's the turnaround time from the time you apply to the time you actually have the money in your business checking account. And we're going to be going over other pieces as well, as far as how this loan program possibly compares to other loan programs that are available to small businesses right now, because there's a number of them. So I want to talk real quick about how these SBA loans work, because there's two ways the SBAs can lend money to businesses. The one is direct, where you apply directly to the SBA and they're the direct lender, or they can require business owners to go through a bank to obtain the SBA loan. Now, if you go through a bank, basically what the SBA is doing there is saying, listen, if the business owner meets this criteria, you can provide that loan, and if they default on that loan, the SBA is going to be a backstop and reimburse the bank for those losses on the loans that did not get paid back. Now, the disaster loan we're talking about regarding the coronavirus today, that is one of those loans that you apply directly to the SBA for, mostly online, submit documentation to them and either be approved or denied, versus the new program that's coming through the CARES Act, which is that Paycheck Protection Loan Program. That's one that they're most likely going to require business owners to go through the bank to obtain those loans. So let's talk a little bit about the terms of these SBA disaster loans. So there is a limit on the amount of money you can take in the form of one of these loans, which is $2 million. Now, you of course can take less than that, but they place a cap on these SBA disaster loans. The interest rate is probably the best part of these loans because it's lower than normal. So these SBA disaster loans, the interest rate has to be below 4%, where normal traditional SBA loans can actually be higher than that. So there is a huge advantage that you're getting access to essentially cheaper capital. Now, also the other advantage is the duration of these loans. You can take an SBA disaster loan and have it amortized over a 30-year period. So if you're lending money, you can actually make those payments very small, so it doesn't necessarily cash crunch the business when it's going through difficult financial times. The collateral requirements are also unique for these SBA disaster loans. Now, in the past, if the loan was issued for under $25,000, they didn't require collateral. If the loan was above that amount, then some type of collateral was required for that loan to be issued. Now, this is what's new for this coronavirus stimulus package, is in part of the legislation, they lax that wording. So now they are able to issue SBA disaster loans for over $25,000 without collateral being pledged. Now, that doesn't necessarily mean they're not going to take whatever collateral is available. It's just when you apply, if there isn't adequate collateral to sustain that loan dollar amount, they won't necessarily automatically deny you from that loan. Timing is equally as important. A lot of these businesses are wondering, from the time I complete this application, when should I expect to receive the loan dollars? Now, they've given some guidance to kind of say, for this SBA disaster loan program, they're trying to turn the loans within 30 days. However, we already know there's such a huge demand for these loans that their system has already crashed a few times, so you actually can't submit an application. And also with some of these SBA loan programs where you're going to have to go through a bank, the bankers are indefinitely going to be overwhelmed with all these applications, so you're almost going to have to get in line. So even though they're trying to get these within 30 days, it could be longer, and that's dangerous for certain companies that need the capital now. The other thing I will say about the timing is there are documents required to apply for these loans. The more organized the business owner is at submitting those documents, possibly the quicker the turnaround time will be for that loan. Now, I've also put in the description below a link to our article, which includes some of the documentation requirements for these loans. While we're talking about underwriting, this is where traditional SBA loans and disaster SBA loans kind of deviate a little bit. So SBA traditional loans, there's a pretty high bar to get those loans. I mean, banks are really looking for good cash, good collateral, and to have good credit to obtain those. You really need all three to be pretty strong. With these disaster loans, they actually kind of lax those requirements a little bit, where if you're weak in two of those categories, let's say cash and collateral, if your credit's strong, you may qualify for an SBA disaster loan where you wouldn't have qualified for an SBA traditional loan. It's for this reason that it's incredibly important to start this SBA disaster loan process while the business is still fairly healthy. Because if I'm still showing that my cash flow is doing okay with the business, I'm just worried about the next week or two. If I wait the next week or two and then all of a sudden my business gets closed or the cash flow takes a big hit, I might get denied when I apply for that SBA disaster loan, where a few weeks before I actually would have been approved. So timing is very important when you're applying for these types of loans. Now, the other thing I'll say is, even if things are not really bad right now, these SBA disaster loans are a cheap form of cash reserve that you might be able to obtain, saying, okay, the business is doing okay, but if this continues to go on for a month or two, I'm worried where the business is going to be at that point. It may make sense to start this SBA disaster loan process now and just hold that loan as a cash reserve, because it is a cheap form of capital, because all of the loan origination fees for these SBA disaster loans have been waived. So there's actually no fees to apply for these loans, where normally those fees are, 3 to 5% of the actual loan value. So those are gone now. And if you take these loans, so let's say a business takes a $300,000 loan and then they just park it in their business checking account and they get like a 3.75% interest rate. If I kind of do the math, to have that money tucked away, if I just look at how much I'm paying in interest, I'm paying about $750 a month just to have that $300,000 cash reserve, just in case I need it down the road. And some business owners might say it's worth that cost just to make sure the business is going to see itself through until this coronavirus containment effort is over and done with. With these types of loans, even though they are SBA loans, so they're backed by that government agency, you still have to pick your bank wisely, because it's not just the SBA requirements. Each individual bank is going to have their own underwriting requirements that they could lay on top of it, which actually could be more restrictive than the SBA requirements. So depending on the type of business you are, if you went to one bank, they might deny your SBA disaster loan, where if you just went to another bank across the street, they could approve it. So normally with our business owner clients, we say, speak to your accountant, speak to your financial advisor, or an independent mortgage broker, because they usually know the little nuances that certain banks require in the area. So they might be able to point you the direction to the best bank or credit union that can give you the best chance at getting approved and getting approved quickly. It's also important for business owners to know that there's multiple loan programs right now out there available to them, and they really have to weigh the pros and cons of each program against each other before they leap into one or the other. Because if you go one way, it might disqualify you from entering another type of program. Like a good example is from the CARES Act that just got passed by Congress. They have that Paychecks Protection Loan Program, which that program has loan forgiveness baked into it, where essentially if you adhere to the terms and follow it, you could actually have a portion or all of those loans forgiven at some point in the future, which might be better than the SBA disaster loan program. And sometimes you can't access both. Accessing one disqualifies you from the other. And I'll also note that some states are starting to come out with their own loan supported programs that give companies access to capital quickly, at some of them for 0% interest. So you just got to be very aware of all the programs, working with your accountants and advisors to make sure you're going in the right direction. If you have any questions, please feel free to reach out to us at moneysmartboard.com. Thank you.